Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a headline from the Bloomberg Professional Service. UAW President Shawn Fain says the union is expecting to be at the bargaining table tomorrow. This word from the union, Shawn Fain saying the UAW does expect to be talking once again tomorrow. Stocks are trading lower right now with $4 billion options event amplifying volatility. Traders are weighing the impacts of that strike that hit Detroit automakers. They're also sifting through economic data ahead of next week's Fed decision. S&P now down 51 points. We're on track for a move lower this week, down 1.1%. Dow Jones Industrial Average down 249, down 0.7%. NASDAQ down 225, a drop there of 1%. 10-year yield 4.31% with a 2-year that's yielding 5.02%. Gold up 0.7%, 19.24 the ounce. And West Texas Intermediate crude up 0.9%, 90.98 a barrel on WTI. Factory output stalled in August, and the strike at the big three U.S. automakers is casting a shadow on this month. And with more, here's Bloomberg's Vinny Del Giudice.
The Federal Reserve reports factory output eked out a 0.1% increase last month, restrained by a drop in motor vehicle production. That trend may continue this month after the United Auto Workers called a strike today against GM, Ford, and Chrysler maker Stellantis. Outside of the auto sector, the Fed's factory data signaled strength in the output of business equipment, home electronics, and home appliances. Vinny Del Giudice, Bloomberg Radio.
And on a down day for the rest of the market, the automakers are higher. GM shares up 1.3%, Ford shares up 0.4%, Stellantis up by 2.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
I guess it speaks to how long we've been talking about this potential auto strike to see shares of the big three actually rising today. Not by a lot, but it's far from a sell-off, Kaylee. And maybe to your point earlier, that has something to do about the actual scale of the strike, which we should be deliberate about. You hear a headline like this, historic, all three of the big three. But it's really about 15% that's being impacted here.
Yeah, 13,000 workers walking out of 3 specific facilities in 3 states. This is not the entire UAW walking out simultaneously, full work stoppage. Part of that is because the union needs to maintain its strike fund. They only have so much money to continue to pay all of these individuals while they're striking. So part of it is preservation, but they also were being very specific and targeted about what facilities they're choosing to go after, ones that make very high profit vehicles.
Yeah, how about that?
Is what they're aiming.
Absolutely. And, look, you like to think that they are not trying to put one of these companies out of business. They do have their strike fund to preserve. They have employers to potentially preserve as well. We'll let them speak for themselves on that. But you know who went to the source today was, of course, our friend David Weston. As soon as I heard Mary Barra was coming on, I thought, boy, David's done it again. And he's with us now from World Headquarters in New York. David, it's great to have you. We always talk around this time because you're gearing up for Bloomberg Wall Street Week in just a couple of hours here. But to speak on this day of days with the CEO at General Motors is something. She sounds pretty disappointed.
She is disappointed. She was very explicit about that. She thinks that they have a very strong offer on the table, and obviously this really throws a wrench, forgive the expression, into her plans to converting to EV. And this is part of what Mary Barra had to say.
I'm extremely disappointed and frustrated that we're even on a strike. We didn't need to get here. General Motors has an exceptionally strong offer on the table. It's historic. It's the largest increase from a wages perspective in our 115-year history, along with world-class health care benefits and many other provisions, job security, et cetera, and a COLA adjustment.
That COLA, of course, is cost of living adjustment. And Mary there, I think, really conceded that they admit that the employees deserve and are going to get more money. They've already got an offer on the table, something like a 20% increase. But at the same time, it's not nearly what Shawn Fain from the UAW wants.
Yeah, and arguably, David, it's not what President Biden wants to see either. When he spoke at the White House earlier today, he said the automakers should go further. Record profits should mean record contracts for the UAW. I can't believe or I wouldn't think that the C-suite would be super happy to hear the President of the United States speaking this way.
Well, I'm sure you're right, Kaylee, but I was watching that, and it did strike me, and who knows what's going on behind the scenes. Behind the scenes, maybe Gene Sperling going out to Detroit is really reading the riot act on the labor side as well as management. But if you're trying to get to a deal, I'm not sure if you were Sean Fain, or more importantly, the membership of the UAW, and you listen to the president, you say, boy, we better make some concession. That sounded to me like you say, boy, the president's behind us, let's keep going full tilt. Maybe that's the way to get to a deal in a reasonably short period of time. I'm not sure of it.
It was interesting to hear Mary Barra talk about putting jobs at risk.
Yeah.
David, when you spoke, that the longer this goes on, the fewer vehicles are being made, and that could actually impact the overall headcount at General Motors. How real is that threat?
Well, it certainly is a real threat, depending on how long it goes on and what the effects are. But the job issue, as you know, Joe, so well, operates both ways. One of the things I asked her was, is it a zero-sum game? Because GM and Ford and Stellantis are saying, if we accepted your demands, we'd be out of business at some point, the way we were, two of us, back in 2008. On the other hand, the UAW is saying, if you're going all EV all the time, that takes something like 40% fewer workers, so we're going out of business. So it's not clear to me which way the job's cut. Mary was careful to say, we're trying to figure out a way to keep all those jobs. I'm not sure how they're doing that, but she tried to say, no, we won't be losing a lot of jobs because of EVs.
Yeah, she said that repeatedly, that jobs would be protected as they go through this transformation. She came back around to that point. I noticed, David, a couple times in your conversation. Also in your conversation, you asked her about her dad and your dad, which I understand had a few similarities. They were at a very different time in the auto industry, sure, but they'd seen strikes before. This one, though, is different. Is there a sense that this is because just the auto industry itself, EV transition being example number one, is changed now, that this is not the auto industry of before?
Well, it certainly is not, Kayla. You're totally right. And the EV transformation is an important part of that, that we weren't looking at. And I was a child at the time in the 50s and 60s, as Mary Barra was in Pontiac. Her dad was a tool and die guy, as we called them, at Pontiac. At the same time, my dad was a tool and die guy at AC Sparkplug, about 30 miles apart from one another, and members of the UAW. And every year, we would anticipate the possibility as a contract came up of a strike. But part of the historic part isn't necessarily the number of jobs, is that they did all three at once. The tradition always was, when I was growing up, they picked one, they negotiated a deal with them, and then that was a pattern bargaining on the other two. That's what's somewhat different here, as Sean Fain seems to want his cake and eat it too. On the one hand, he really wants to hurt these companies and some of the more valuable products. At the same time, he doesn't want to take all of his people out because he's got to pay them money then.
Well, as we think back in time as well, David, there's the matter of pensions. Retirement. Sean Fain said, you double our pay right now, we're still on strike. We want old-fashioned pensions. Our Republican analyst Rick Davis said earlier, this is a union that wants to drive back into the 1980s. They want a pension, and they want the internal combustion engine. How does this union rationalize the future without EVs? Or should I be asking that question differently? Because this seems to be, in great part, the rub.
It really goes in part to the heart of the matter, I think, Joe. It's exactly right. And by the way, it's not just pensions, it's also health care. And they want to go back to the 80s in a very different place and time. And I think, I just don't, from what I know of other corporations, it's really hard to go back and have all defined benefit rather than defined contribution plans for pensions. It's really hard to say, we'll pay all your medical costs no matter what. I certainly was working at Cap Cities at the time. We took a look at that defined benefit versus defined contribution, and we concluded if we capped with defined benefits indefinitely, we would be bankrupt. At Capital Cities ABC, and that was a really wealthy company. It's a really big problem. And that, by the way, is not, in my view, Mary Barra's fault or Sean Fain's fault. That's just the way the world has changed. And I don't know how they're going to get past that, because you're right, Joe. Sean Fain has said, this is indispensable. They got to get this.
It makes us wonder how this is going to come together here.
Yeah.
Kaylee, and how many weeks this might go on for. We're thinking weeks, not days, based on all the analysis we've heard.
Yeah, we can't know for sure. What we do know is David will be back on Bloomberg Television, 6 p.m. Eastern, for Wall Street.
And we'll have that Mary Barra interview in full, right, David?
Yeah, and we will. And as important, perhaps, we're going to talk to Marty Chavez, formerly of Goldman Sachs about AI, and Ruth Simmons, who used to run Smith and as well as Brown, about what's going on with college education these days.
Sounds great. We look forward to it. 6 p.m. Wall Street time. our friend David Weston and Bloomberg Wall Street Week. David, we'll be watching. Have a great weekend, and we'll talk to you next week. With Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. President Biden is urging Detroit's big three legacy automakers to offer more concessions to the UAW in order to end a strike that threatens the American economy, saying he will send 2 members of his team to Detroit to engage both sides. UAW workers are off the job at a Ford plant in Michigan, a GM plant in Missouri, and a Stellantis plant in Ohio. Keith Naughton follows the auto industry for Bloomberg News, and on Bloomberg Radio, he explained why plants in Michigan, Missouri, and Ohio are being targeted.
These 3 plants make hot-selling products. The Ford plant makes the Bronco SUV, the Stellantis plant makes the Jeep Wrangler, and the General Motors plant makes the Chevy Colorado, a mid-sized pickup truck, all hot sellers, all profitable. But yes, they've left the door open to ratchet the pressure up even more by going after the big pickup trucks that make the most money for the company.
Pro quickly saw initial delivery times slip well into November as the new flagship device went on sale for pre-orders today, suggesting strong demand for the most expensive Apple models. Adobe shares are declining today after earnings. Adobe is now down by 4.9%. The software company reported third quarter results that beat expectations. It also gave an outlook that analysts see as conservative. And those are our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington, we'll send things up to New York in about 5 minutes for Bloomberg Business Week. Let's get you up to date now. Nancy Lyons joins with world and national news from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Biden believes the big three automakers could improve their offers to the United Auto Workers who went on strike at midnight. He says they need to pass along their record profits to the rank and file. He also vowed to help settle their differences.
I'm dispatching 2 members of my team to Detroit to offer their full support for the parties in reaching a contract.
Biden says he respects workers' right to use their options under the collective bargaining system and understands their frustrations. And he says the companies have made some significant offers, but he says they could go further. President Biden's son Hunter has been hit with new federal charges of purchasing a firearm without disclosing he was using drugs. Brown University political scientist Wendy Schiller says this could have an unexpected political benefit for the president, especially if his son is convicted.
It's possible Hunter Biden does jail time. And the sad thing for the Biden family is that would be good politically for President Biden because his son would have been subject to the justice system the way everybody else.
Wendy Schiller of Brown University. Jets quarterback Aaron Rodgers is recovering from surgery to repair a torn Achilles tendon that he suffered in this week's Monday Night Football game. Dr. Spencer Stein with NYU Langone Health believes Rodgers will be back next year.
Generally, I would say that 1 year recovery is about average. And it being his left foot, I think that gives him a good chance of being able to return potentially at the beginning of next season.
Stein says Rodgers will likely return at a high level, similar to his pre-injury status. Tune in tonight at 5 o'clock to Bloomberg Radio when former Vice President and current GOP hopeful Mike Pence will be speaking with Balance of Power co-hosts Joe Matthew and Anne-Marie Hordern. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
Thank you, Nancy, as ever, and happy Friday to you. Have a lovely weekend. You know, we were talking, I think it was actually around this time yesterday, about the economic impact of the Renaissance Tour and the Eras Tour, Beyonce and Taylor Swift. They're getting a lot of talk in Washington.
Yeah, rightly so.
The Fed put them in the beige book. We're hearing about them on Capitol Hill. There's worried that this economy will come to a screeching halt without them. I haven't seen either.
Same.
You're going
Sadly.
to, though. You're going to see them in Europe, I believe.
I hope so.
At some point soon, you have a plan for this. So, haven't heard a lot about Rihanna until yesterday. Not by name, but listen to Congresswoman Summer Lee, Democrat from Pennsylvania, talking about the auto workers' strike. She's coming behind the UAW. She wants to see them compensated. She wants to see the workers get paid.
These workers don't threaten our economy, but CEOs do. So to the big three, pay those workers what you owe them. Don't act like you forgot.
Did you get it? Lyrics from a Rihanna tune, right?
Uh-huh. Can you hum a few bars?
Well, I can now because I had to go and find the thing. So let's make sure that we get this. What is that actually? What's that song called? Can we say it on the air?
No.
We had to bleep. No, you can't.
You would have to bleep
part of the actual title.
The first word.
Okay, so just one more time. This is Summer Lee. You got this?
Pay those workers what you owe them. Don't act like you forgot.
Don't act like you forgot.
Huh? Right?
There you go.
Pay them their money. It's actually pretty good use of pop culture to make a point on the House floor.
Absolutely.
You endorse this?
And I'm going to probably be singing/humming this for the rest of this Friday. So thank you very much, Joe.
This
for
earworm is directed squarely at Bloomberg Business Week. They will have to survive this for the next 3 hours.
Can I just say, this proves that all of these millennial pop stars.
Yeah.
Have their cultural influence.
Yes.
But economic as well.
Absolutely. Rihanna, Taylor, and Beyonce, steeped in policy. All right, we told you about Mike Pence. He's going to join us 5 p.m. Washington time on Balance of Power, and we're going to bring it to you here on Bloomberg Radio. We'll meet you back then. Kaylee, have a great weekend.
You too, Jeff.
Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers Studio, streaming on YouTube and Bloomberg Originals. It is Friday, September 15th, 2023. I'm Jess Mitten, along with my co-host, Bloomberg TV correspondent Simone Foxman, who we're both in for Carol Masser and Tim Stenivek, who do have the day off. Happy Friday, Simone.
Happy Friday, Jess. Yeah, we're holding down the fort.
We are. What an honor, right? Who's who in this situation? It's always a pleasure, though, filling in for both of them. But as you know, Simone, looking over at the U.S. stock market, though, unfortunately jeopardizing those weekly gains because of today's losses, really driven a lot, not surprisingly, when you have a $4 trillion triple witching event, especially in the options market, really amping up some of this volatility as we get into the weekend. But you know what? There was some brighter news. U.S. inflation expectations fell to the lowest in more than 2 years when you're looking at that latest University of Michigan survey, and consumers are growing more optimistic about the U.S. economy.
Yeah, but it does feel like we have this higher for longer idea very much in mind, with CPI coming in pretty hot, retail sales coming in pretty hot, even though, yeah, some of this is due to energy costs. There's a lot here for the Fed to ponder, and a lot maybe to suggest that even if we don't see maybe another hike by the end of the year, we will push out those potential rate cuts, and that's really what the market has been looking at.
And we're going to have more on what to expect at the Federal Reserve's decision next Wednesday at this hour. And then also, we'll keep you updated on the latest with UAW strike. At the big three automakers, we'll also speak to the CEO of Bolt on how AI can help the world of e-commerce, Simone.
Yeah, we'll check in as well on the rollout of Pfizer and Moderna booster vaccines today. And in the magazine, we're going to delve into the Justice Department's case against Google and its first test of Silicon Valley's dominance since a landmark decision about 20 years ago again around Microsoft.
And the CEO of Farmerline stops by so we can chat with him on the developing and when you're looking at the agriculture business here across Africa. So those are going to be some really fascinating conversations, Simone. So I'm excited over the next 3 hours what we're going to get into.
Yeah, we'll take people around the world as they close out the trading week, certainly.
And then also we'll have some news there looking more deeply into the IPO market as well.
Yeah, ARM, man, crazy. Good stuff.
And of course, Instacart coming up as well. But Bloomberg's countdown to the close starts right now with our friends over at Bloomberg Television.
Starts right now.
To the close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Bonnie Quinn. We're joined right now by our colleagues, Jess Menton and Simone Foxman. Together, we welcome our audiences across all of our Bloomberg platforms, television, radio, originals, as well as those folks streaming us on YouTube. An interesting day, guys, in the market today. And of course, obviously, a big focus right now on economic conditions.
Definitely. And I know y'all are probably missing Carol Masser and Tim Stenivek today, but you do have Simone and myself here. And obviously, when we come back for the closing bell later on, but looking more broadly in the market and seeing things, especially stocks jeopardizing those weekly gains, Romaine, especially when you're thinking ahead to the Fed's next week Federal Reserve meeting.
Yeah, not to mention all that focus that we're paying on what's happening in Detroit with the first UAW strike against 3 automakers at once, certainly.
And of course, Simone and I were taking a close look when it came to what's going on in the housing market, and especially when you're looking at some of these cancellations that are happening there as well, and some of the dynamics, because when you think of the backdrop and just think of where mortgage rates are at this moment, especially doubling just over the last couple of years, and then when you think about the issues when it comes to low inventory, obviously a big thing coming out of the housing crisis, but really was exacerbated by the pandemic, Simone, and when you're thinking, when you're vying for all these options and how competitive the housing market is at this point.
Yeah, look at it. 60,000 homes nearly, home purchase agreements canceled in the month of August. That's about 15.7% of homes that went under contract that month, according to Redfin. Big numbers.
Yeah, big numbers here, and it gets, I think, to the broader point about whether we're at some sort of inflection point in the economy, in the markets, and the cycle itself here. And I'd be remiss in not mentioning that here on this September 15th, 2023, it's actually, well, the anniversary of the collapse of Lehman Brothers. Remember, this was a pretty big week. Of course, Lehman actually filed for Chapter 11 on September 15th. But remember, that same week, you had Merrill Lynch being sold off, and then you had Fannie Mae, Freddie Mac being put into conservatorship. So you had just a huge shift in I guess our financial system, if you will. We should point out, 25,000 people or more lost their jobs just in the Lehman bankruptcy alone, Bonnie.
It's sending chills down my spine, Romaine, because I was working in here that whole weekend long. We finally got this resolution, and I had to pass Lehman Brothers on my way home, and I saw people carrying cardboard boxes out of there, and there's nothing worse than seeing that.
And it's amazing. We talked to a lot of folks who unfortunately managed to find other jobs on Wall Street, and we asked them about see it, not just the collapse, but the fact that it happened so quickly, guys.
Exactly.
Yeah.
Well, we should point out John Authers' column today, pointing out that while much of everything else hasn't done very well since, from economic to cultural conditions.
No. Have you looked at bank stock valuation since then?
You
put that chart on your Bloomberg terminal, and I think it tells you a lot here just how damaging that crisis was.
Yeah, but I remember I was actually in an economics classroom, believe it or not, 15 years ago, trying to learn about what exactly was happening in the market. And yet, at the same time, we're looking at home prices continue going up and up again, but now the stakes very different.
Yeah, when you think about also, though, just kind of changing dynamics and thinking about we're getting closer to that one-year anniversary of when the S&P 500 did trough on October 12th of last year. But if you look at the S&P 500 year-to-date, up 16%, well up over 20%, which many consider to be that bear market territory since then. So we've come a long way over the past year. So it's going to be interesting to see heading into next week, especially with that Fed meeting, what shapes up there.
All right, guys, a quick check-in, of course, with our radio colleagues. That does it for now, but we're going to check back in with Jess and Simone a little bit later, live on television, radio, and YouTube at 4 p.m. for our Beyond the Bell coverage, where we will take you through the market close. Also, a reminder that Bloomberg Business Week is now on Bloomberg Originals.
When you think from the economic standpoint, we still saw a lot of resiliency when it came to retail sales. Still, though, when you're looking at some of these moves in the bond market, as well as the stock market heading into this Fed decision, it's going to be really interesting to see, to your point earlier, Simone, not just whether or not we're approaching closer to when the end of rate hikes are going to be, but investors really want to know just how much longer the Fed is going to keep rates elevated. So who better to bring in to chat with us about all things macro, Fed related, obviously, clearly the bond market. We were thinking about Michael McKinsey, who is one of our rates reporter here at Bloomberg News and used to be my desk mate, too, when I first started working at Bloomberg News, joining us on Zoom in New York. Always great chatting with you, Mike. So thanks so much for joining us today. I wanted to first start off, before we get into a lot of the macro related to the Fed, is when you are looking at UAW and the strike against the big three automakers from more of an economic perspective, because this has been such a big story this week as well as today. How do you think this impacts when you're thinking about Detroit, Michigan, their economy, and what its implications could be potentially more broadly for the U.S. economy?
Hey, Jess. Well, good to chat with you again. And I think it's really going to sort of rekindle some of the anxiety about inflation. We did see this week the August CPI coming out, and the super core measure, which the Fed focuses on, that ticked up. And I think that's kind of the path here. A lot of investors have been expecting that inflation will continue this nice gradual easing. But from what we can sort of see here, there is potential for bumps in the road along that path. And certainly, big wage increases will certainly get people worried. that that's going to happen.
Yeah, not to mention the prices of, important vehicles, very well-known vehicles, potentially moving higher. Because frankly, new cars are already continuing to move higher. I think that was one of the points that really surprised me when we were kind of digging through that CPI report. Does that play into the calculus as well?
Sure. I mean, I can talk from personal experience. I just got my latest insurance renewal for the car, and it's jumped a lot. And in fact, I think Chris Ansey pointed out on T-Live this week when we were covering CPI that car insurance had gone up nearly 20%. Over the years. So if you own a car, you're getting hit pretty hard.
When we head into next week, and especially at this meeting, I know we're going to have the quarterly economic projections as well as those dot plots. What is the rate market telling us and expectations heading into this meeting, where they think the Federal Reserve is going with this?
Well, if we look at the futures market for later this year, and these are the OIS futures, which are set for each of the upcoming meeting dates, we've seen a bit of a shift away from pricing in more of a rate hike in November to the December meeting. So the December meeting now shows there's just slightly above 50% odds that the Fed will go again. I think the basic idea in the market is that the Fed's pretty much done. It would take a lot for them to go one more time. The dot plot back in June forecast another rate hike by the end of this year from the Fed. No one's expecting the Fed officials to back away from that call. I think what's really interesting is when we look at the 2024 dots, it wasn't that long ago the market was pricing in about 150 basis points of cuts for next year. They've now dialed that back to just under 100 basis points. Now, that kind of is in tune with what the Fed was saying in June, that they thought that next year they would cut by 100 basis points. There's now some expectation that the Fed will at the very least dial that back to only 75 and possibly to only 50, because they're going to have to push this mantra that rates policy will stay higher for longer. And it doesn't really make sense if you're going to say higher for longer and then indicate you're still going to be prepared to cut by four shots of 25 basis points next year. So I would suspect they'd probably go with it to that sort of 50 to 75, which would see them saying we're only going to realistically do 2, maybe 3 rate cuts next year, and it would be towards the back end of next year.
Yeah, it's interesting because I suppose when we've heard from Jay Powell has been, don't talk about rate cuts, don't talk about rate cuts, don't talk about rate cuts. But I guess we have to see the dot plot, right? Because right now, it just seems almost as though traders are talking about some sort of fantasy that doesn't exist.
Well, yeah. I mean, I think the important thing to remember here is this is a Fed that keeps saying we're data dependent. So every time a piece of data comes out, the market's going to bounce around. So the Fed has essentially said there's no forward guidance. But the dot plot in its own way does now begin to tell us there is some forward guidance. I think it's probably too early for the Fed, though, to start talking about, in terms of rate cuts next year, how long can you keep the funds rate, which is currently in that 5.25%, 5.5% band, above a falling inflation rate? If inflation continues to fall for the rest of this year and into early next year, and the labor market slowly but surely continues to weaken, then Fed policy is just going to naturally keep getting tighter and tighter. And there will come a point, and this is something that John Williams, the head of the New York Fed, recently said, that where the Fed will have to entertain and give some guidance to the market about how they're going to, I suppose, use a risk management approach to making sure that they don't over tighten. It's a Fed that's beginning to sound like it's patting itself on the back here by saying we want to get a soft landing. That's a very elusive thing to get. And so there is scope for some rate cuts next year on that basis alone.
Mike, what do you make of WTI right now over $91 a barrel?
Well, that's interesting you mentioned that, because that has certainly been the one thing I keep hearing from sources over the last couple of weeks. Everybody knows that all the big recessions in the US over the last 40 plus years have come from a spike in oil prices. It's kind of lost in the mix there. I mean, it's I think the 15th anniversary of the Lehman collapse. Around that time, oil spiked a lot as well. So it was a real double whammy for the economy. If oil keeps going the way it's going, it is going to create problems, I think. There is a risk here that it feeds into headline inflation, and over time that could actually create a sticky core price. And that will push the Fed into a really difficult position next year, because the other factor, of course, from higher oil prices is as you fill up your car with gasoline, you see the price going up, and that cuts into your weekly shopping and your budget. So it really higher gas prices is a tax on spending. So you'll get a slower economy. But at the same time, if inflation's sticky, how does the Fed then try and navigate that process? If growth is slowing, but inflation is sticky, they're going to have to start thinking more in terms of forward looking and start to flag what they think they're going to have to be able to do here. It's a very, very tricky situation they could find themselves in towards the end of the year.
Especially when you think about, we discussed what's happening with yields in the oil market, but then you also bring the strength of the US dollar, especially over the past month, and what that has added pressure to the broader equity market. When you have those three pressures, especially on stocks that have mostly remained resilient, other than obviously when you're seeing a bit of a sell-off today, though, how do those three factors, you think, ends up impacting the direction of the stock market going into year end?
Well, I think what's really interesting about the economy is that America seems to be standing increasingly alone, or what they call the US exceptionalism. The rest of the world is slowing down, particularly in China and certainly in Europe, where there's a more stagflationary environment beginning to emerge there. So ultimately, the S&P 500, it's these global companies. They rely on overseas earnings. A stronger dollar is going to hurt them from that perspective. Higher oil prices is also going to feed into cost pressures. And I think one thing is that, clearly the US companies have done very, very well managing to keep the margins up. But I think all things, as you point out, it's hard to see how long the US companies can stave off the margin pressure from here.
Yeah, we sort of know about this weakness in China, right? We know a little bit about the weakness in Europe, though it doesn't seem, I guess, quite as pronounced at the moment. When you talk to your sources, is there some way that people see this kind of the global issues filtering through to the U.S. economy in a way that we're not really talking about right now?
I think it's more a case that the U.S. in its own ways is a pretty closed economy, so it can probably trundle along for a while. But I think it's going to be difficult, as you say, with a stronger dollar, high yields, a Fed on hold at much higher levels than other central banks. U.S. real yields are quite high compared to other countries. So I don't think the U.S. is out of the woods here. And I think, having talked to a few investors this week, their view is that Europe is ahead of the US in terms of slowing down, but ultimately the US is going to catch up. So for the way they're being positioned is they're buying European bonds, expecting that the economy there will slow faster than the US. But then they're looking to then segue into the US, particularly when they see, particularly if they get a 10-year yield popping towards, say, 4.5%. So that seems to be the game plan I'm getting from a number of investors.
All right. Michael McKinsey, rates reporter here at Bloomberg News. Always a pleasure getting your perspective on all things markets. We'll have more coming up on the markets pretty shortly with Simone and myself. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. Red on the screen with the Dow, the S&P, and NASDAQ all trading lower. We're on track for a losing week. We've got 39 minutes to go until the closing bell at the New York Stock Exchange. S&P right now down by 51 points. That is a drop of just about 1.1%. The Dow down 259, a decline of 0.7%. NASDAQ is down 215, drop right now of 1.6%. Big tech leading today's losses. Giants like NVIDIA, Meta Platforms, both declining. NVIDIA is down now by 3.5%. Meta Platforms down 3.6%. Amazon trading lower by 2.7%. 10-year yield 4.32%. With a 2-year 5.03%. Spot gold up $13 the ounce to $19.24, a gain of 0.7%. And West Texas Intermediate crude oil is up 0.9%, $90.98 right now for a barrel of WTI. President Biden is urging Detroit's big three legacy automakers to offer more concessions to the UAW in order to end a strike that could threaten both the U.S. economy and also increase wages. GM CEO Mary Barra was interviewed on Bloomberg Radio today, and she said this walkout never should have happened.
I'm extremely disappointed and frustrated that we're even on a strike. We didn't need to get here. General Motors has an exceptionally strong offer on the table. It's historic. It's the largest increase from a wages perspective in our 115-year history, along with world-class health care benefits and many other provisions, job security, et cetera, and a COLA adjustment.
Right now, we do have shares of General Motors up by 1%. Ford is up 0.2%. Stellantis up by 2.2%. You can hear more of that conversation on the Bloomberg Markets podcast, and you can download it wherever you get your podcasts. Again, recapping stocks lower. S&P now down by 51 points, a decline of 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks so much. Well, it was the week of the IPO, the largest IPO this year, ARM, and it went off pretty successfully. Shares rallying almost 25% yesterday, but they're down about 1.5% today. So 22% higher than the $51 per share price that they set for the IPO. Now, launching a successful IPO was also important for the parent SoftBank, which had bought the company in 2016 for $36 billion, but had flameouts like WeWork, DoorDash. However, SoftBank did leave a whole lot of money on the table. Bloomberg reporters Ryan Gould, Amy Orr, and Ian King wrote a play-by-play of how the final day wrapped up and why it matters. Ryan, I'm pleased to say, joins us now via Zoom. Ryan, thanks so much for joining us. ARM's IPO was, by your reporting, 10 times oversubscribed, I believe. How did bankers settle on $51 a share?
Jess, Simone, thanks for having me. It was quite the week, it turned out, particularly that final pricing meeting. I mean, all being said, I think probably what ended up happening was a fairly normal meeting. Bearing in mind, obviously, as we say, this was a SoftBank IPO. Massa probably felt that there was much to sort of write the record on, given what had happened with a few of the other names you mentioned at the top there. But yeah, you know, that Wednesday meeting, that was something that, you know, there was the case laid out for sort of $52 a share. There was $10 on the table by choosing the 51 a share. That being said, you know, $51 a share was still the top of the marketing range. This is something that, you know, he felt could set the company up for success come yesterday, Thursday, it started trading. And, you know, as you mentioned, we're up, still up 22% from yesterday. So I think he's probably looking towards, you know, today being Friday, the end of the week for trading. You know, they're in a good position. I know that the ARM folks they'll be feeling good as well.
Especially when you're thinking about this year's biggest IPO, when we're looking ahead to what this could potentially mean for other IPOs coming down the pipeline. It's been so challenging, especially over the past year. Obviously, that correlation when you think about what was happening with the Fed's most aggressive hiking cycle in decades. What is it shaping up like, do you think, moving forward in the near term, whenever you're speaking with your sources, as far as what this means for other companies that could potentially go public now?
Yeah, I mean, make no mistake, this is a huge event for the rest of the market. I don't think we're in a position just yet where we could say, you know, the floodgates will open. But certainly through the end of this year, through the end of 2023, we're in a position that now you could probably start to see premium assets, you know, marquee names coming out and thinking, okay, well, we're going to push the button. I mean, just to name one, you know, Birkenstock, the German footwear maker, they filed. They are looking to go. Probably, you know, we could see them setting a price range later this month. People know Birkenstock. People know how, you know, their heritage, their brand, and they feel confident enough. And I think, you know, seeing Arm getting off to such a great start yesterday and today in trading, it's a boon. It's definitely a shot in the arm. That being said, not every company is going to be able to come out and think, you know, this is the time for them. Many sources are saying to me and others that, you know, 2024, the first quarter of 2024, as soon as you get that sort of full year audited results in probably no later than the end of February, will give you a better chance. So you can put audited results in front of potential investors on the roadshow versus the 9 months that you'd only be able to provide as of now. That, I think, should give some investors as well, you know, much more comfort to think about, you know, let's see how ARM plays out. Let's see what happens to Birkenstock once it starts trading. And obviously, I haven't mentioned yet Klaviyo or Instacart, both of which
popular
are
names
to trade next week. So yeah, I mean, obviously, I would caution and say that, you know, ARM is, you know, Instacart is clearly not like ARM, and Klaviyo is not like Instacart. So, you know, when you're thinking about these things, it's all a little bit relative, and I do think you have to be a bit cautious. But there are some good signs that into next week we could be in a position where 3 IPOs in a fortnight could get off to, you know, Aurora.
Yeah, and it's not like every SoftBank IPO has always done extraordinarily well, even, you know, if they had a bit of a share pop on the first day. You know, you've been reporting on Instacart as well. I believe you broke the news that the company was raising its price range for its upcoming IPO, which may, it sounds like, price on Monday. What are the big questions that you're asking your sources right now around how this IPO is going to go?
Instacart's an interesting one, and we reported this morning that they are looking to price Monday evening, start trading on Tuesday. Much of the question, I think, around Instacart is not so much around the business model. It's more around, you know, as an IPO process like this unfolds, how are companies and their executives and perhaps in other cases sponsor backers thinking about pricing? Just how aggressive can you be on valuation in a very sort of valuation sensitive environment? Just exactly how far can you push the boat and not sort of scare off investors? Because I think when you think about going on a roadshow, you're wanting to say you've already identified maybe 100 or so accounts that you absolutely want in your book. I mean, there are always going to be instances where your top 5, top 6, maybe 1 or 2 of those won't actually agree to come in. So I think it's a case of thinking about how can we please as many people as possible. One of those things is not pushing the valuation too hard. It's clearly a sign of strength in Instacart's case that they were able to come out this morning with that $2 hike to the range. It was always sort of seen as an opportunity, even at the beginning of the roadshow last week, that, you know, perhaps it was very attractively priced. There was perhaps some little wiggle room, and clearly they've taken advantage of that. But I think as a collective sort of set, when we look at this IPO window that we're currently in through to the sort of Thanksgiving period, the massive question is around how far can you push pricing, just given how sensitive investors are in this higher rates environment, you know, perhaps with anticipation of a softer landing into next year. You know, we really don't want to be thinking about scaring off investors even further or again from IPOs.
Right, and I mean, especially with a consumer that may fray. I mean, isn't that what we've heard all earnings season? The consumer could fray a little bit here.
Yeah, exactly. I think, you know, even there are, in Instacart's case, in ARM's, you know, there has been significant interest even from retail investors, so to speak. And when you think about ARM yesterday was one of the sort of most highly tracked stocks, new stocks on Fidelity. I mean, people are wanting to get in on this as well. In regards to, the actual spending of it, Birkenstock has just put out a revised filing today with 9-month results through September of this year. It did not come with a price range, but things are looking rosy. I mean, it must be said that things are looking rosy, and they're hoping to getting to a position by the end of this month where they could be pricing and trading before Columbus Day.
All right, Ryan Gould, U.S. IPO reporter at Bloomberg News, joining us on Zoom from New York City. Always a pleasure getting your perspective on all things IPOs, and especially what's shaping up when it comes to Instacart and these others that are coming up shortly. Bloomberg Business Week is brought to you by Glenmead. Glenmead offers sophisticated wealth management and investment advice solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. Simone and I will have more coming up shortly, especially since we only have a little under a half hour before the closing bell. But first, let's get a check on the latest world and national news with Nancy Lyons in our Washington, D.C. newsroom. Nance?
Thanks, Jess. A first-of-its-kind strike against all 3 Detroit automakers is underway. Close to 13,000 of the United Auto Workers' 150,000 members are off the job at one plant each for Ford, GM, and Stellantis. UAW President Shawn Fain is picketing with the Ford workers in Wayne, Michigan.
We're not asking to be millionaires. We're not asking to join the billionaire class. We're asking for our fair share of the fruits of our labor.
Fain says the UAW will return to the bargaining table tomorrow. Company executives say the workers' demand for a 36% pay hike is too much. American consumers appear to be breathing a sigh of relief when it comes to inflation.
A year ago, those polled by the University of Michigan feared inflation soaring. Survey Director Joanne Su said in a Bloomberg interview, they no longer do.
So consumers have absolutely noticed that the slowdown in inflation has stalled a bit, and that's part of the reason why consumers aren't feeling great with their sentiment this month. But at the same time, they do expect the slowdown in inflation to continue.
Who said COVID, political polarization, and other uncertainties have added to pessimism about how those polled feel about the economy and the country. In Washington, Irv Chapman, Bloomberg Radio.
Today marks 60 years since Ku Klux Klan members bombed the 16th Street Baptist Church in Birmingham. Today, that church held a special service honoring the lives of the 4 little girls who died in the blast. Supreme Court Justice Ketanji Brown Jackson was among those who spoke.
Unlike those 4 little girls, I have lived and have been entrusted with the solemn responsibility of serving our great nation.
Jackson says it's the first time she's ever visited that site. Tune in to Bloomberg Radio tonight at 5 Wall Street time when former Vice President and current GOP hopeful Mike Pence speaks with Balance of Power co-host Joe Matthew and Anne-Marie Hordern. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg. We have got the Dow, the S&P, and NASDAQ very much in the red. 20 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Alexandra Semenova.
Good afternoon, Charlie. Stocks are falling this Friday. The Dow is down 0.8%, S&P 500 1.2%, NASDAQ 1.6%, U.S. 10-year yield is at 4.32%, gold is up 13, oil is in the green, and Bitcoin is down 0.3%. Among the main 11 S&P sectors, information technology is leading losses. Utilities, consumer discretionary, and financials are in the green. Laggards to the downside in the Dow are the Home Depot, Microsoft, and McDonald's. On the positive side, United Health and American Express are moving higher. After earnings, Adobe fell 4%, and in the tech space, Apple iPhone 15 Pro delivery time slip, showing high demand. In other news, Instacart now plans to price IPO shares Monday and trade on Tuesday. Ford, General Motors, and Stellantis are facing a targeted worker strike. And wrapping things up, Federal Reserve officials will meet next week and are expected to hold rates steady. Live from the First Word Breaking News Desk, I'm Alexandra Semenova. Charlie?
And we thank you very much, Alexandra, to hear live breaking news over your Bloomberg. Type Squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Jess Mitten and Simone Foxwood here, the Bloomberg Interactive Brokers Studio on this Friday. We have just under 20 minutes to go before the closing bell, but still, when you look on a weekly basis, S&P 500 trying to potentially keep those gains, but it's just marginally lower for the week. But to break down everything that we saw this week, who better to bring in than J.J. Kinahan, Chief Executive Officer at IG North America, joining us on Zoom from Chicago. I've known you a long time, J.J., and getting your perspective on the markets, all things when it comes to macro, especially with the economy and sort of the trickiness of investing right now is amidst a lot of this resilient economic data. I wanted to start off first because we've been focused so much, especially today, on this UAW with this unprecedented strike when you are looking at the big three automakers with Ford, GM, and Stellantis. What's your take from more of a market perspective and what this could potentially mean when you are looking at these stocks?
Well, great to be here. And, it's really interesting what you start off with, and that is you're seeing some of the conundrum that investors are going through right now. If I said to you that the big three automakers are going on strike and they're not really sure where the strikes will take place and it's going to be very confusing, you would think, my God, those stocks are about to get nailed. And instead, what do you see? On a day where the overall market is getting absolutely crushed, you see GM higher by over 30 cents. You see Ford break even to up a couple of cents. So from that point of view, as an investor, it makes it very difficult as you're thinking about, okay, where should I be? Where should I put my money? So we continue to see these mixed messages in the market. This is a little bit of an ugly way to end the week, to be honest with you. As you just mentioned, the S&P giving up the gains for the week. You also have crude oil with its highest close we've seen so far this year. I think that's one of the most significant things we'll see in terms of inflation. And we see, yields closing their highest so far this month. So that doesn't create a great picture. And there's one more thing I'm going to throw in there that starts to give me a little bit more a note of caution, and that has been the incredible strength of the dollar as we're going to head into earnings season soon. And I really think that's going to start to affect sales at some point here as some of the foreign sales, particularly in the tech sector, the Magnificent Seven, Elite Eight, whichever of those stocks you want to call it, may have a little bit more trouble with their go-forward sales.
Let me pull you back a little bit to this UAW strike. I believe there was a calculation out there by Anderson Economic Group that 10 days of a strike, and it's unclear whether they meant the actual factories that the strike's happening at or not exactly, would hit U.S. GDP by $5.6 billion. Now, that's a big number, but it's not an enormous number. If we start seeing this last for, a week, 10 days, 2 weeks, where are you looking for pockets of weakness?
Well, I would say that pockets of weakness will be a bit everywhere, and I think it'll affect the overall market. And the reason I will say that is because you also have some other strikes going on at the same time, some strikes being threatened. So you see that sort of slowdown start to happen. At the same time as you're happening, it does, as I mentioned, the price of gasoline is going to hit people directly in their pocketbooks. And don't forget, this also puts more pressure perhaps on some railroads and trucking, which, again, is there some slowdown there? The auto workers are such a big and powerful union that we've already heard from some of the Teamsters unions that they are going to, in protest, slow down or not work as hard. Don't forget, that's the people who are driving those trucks, loading those trucks, loading those trains. So I actually think if this lasts for any period of time, the effect may be bigger. And that's truly what I overall worry about, is that the entire transportation sector gets affected, which drives up cost of goods. And, we just lived through this whole supply chain shortness, which it feels like we've come out of over the last few months. Does this lead us back to that situation?
You brought up the U.S. dollar and what that could potentially mean for earnings. When you're looking at the DXY, I know the 103 level was very key for a number of traders, even coming into September, and obviously that level has been breached. Right now, it's trading around 105. What levels are you watching for resistance and support as far as what that could mean in the dynamic for the U.S. stocks?
Well, old resistance becomes support, so that 103 level now becomes the support, so to speak. But the 106, just under like the 107, 105, 85 to 106 in that area will be an area that you need to watch. If we can break through that, I actually think that it's going to be a major effect, if you will, on earnings if it lasts for any amount of time. Because we've seen this incredible move versus the British pound and the euro over the last few weeks, and it really is amazing. One other level I will bring up, if you don't mind, relating everything back to the S&P 500 and what we see there, is this 4440 or 4460 level. I'm sorry, we're trading about 4450 at the moment on the S&P 500 cash. Those who are bullish, you'd really like to see us close back above that. And so this last, 15 minutes or so of the trading day becomes so interesting because don't forget, it's also triple witching day. Right. And on triple witching, you will often see on the close, more pronounced moves, if you will, in those last 10 minutes or so. Today, given that we've seen great volumes, we've seen huge moves, would not surprise me to see us have a very big move on the close.
When you say 4460, what's the significance for that particular level? Is that a fib level?
If you go back through to August, that was one of the levels that we really had a lot of trouble going back and forth through, and so it becomes one of our biggest levels for support right now.
I want to ask as well about one of the big headlines in the last day or so, the possibility that Disney could sell off some of its ABC assets. Does this mean anything more broadly in the market? And, do you think it'll happen? Sorry, we only have about a minute here.
Do I think it will happen? It certainly seems to be a will that it does happen. There's a lot to be considered as to where it goes because, again, ABC and some of the broadcasting of games, et cetera, I actually think one of the true values of ESPN. And so we'll see what happens there. Does it mean much for the overall market? What I really think it may mean is the next area you start to look at is so many of these streaming services, because now streaming, particularly if you're a sports fan, has become so expensive because, you look at Major League Baseball, right. You might have the same team playing in 5 different places over the season. That gets really expensive for people.
Mm-hmm. We only have 10 seconds left, but if you could ask Pal a question next week, what would it be?
What does he actually see the rates being 1 year from now? I don't think it actually matters so much over the next few months.
All right.
But, that's the longer term perspective.
Thanks so much, JJ Kinahan, Chief Executive Officer at IG North America.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. While the focus is now on Apple's iPhone 15, Apple is planning an iPhone 12 update to address a French radiation issue. Bloomberg's Denise Pellegrini explains.
Charlie, this move comes after French regulators ordered the company to stop selling the model because it emits electromagnetic radiation levels that exceed European Union standards. Now, Apple insists the 12 model is safe and says the phones have been certified in countries around the world since its introduction in 2020. And it says the problem raised by the French government agency that manages wireless communications frequencies is related to a specific testing protocol. The French ban could have extended to all 27 EU countries after 3 months if Apple had refused to issue updates and if no other government objected. And Charlie, I should also mention, Apple is already phasing out the iPhone 12. It debuted in 2020. It stopped selling it after it announced its iPhone 15 line on Tuesday.
And that's Denise Pellegrini reporting Apple shares are trading lower 0.56%, all part of a broader tech sell-off today. We've got NASDAQ right now down by 1.6%, the NASDAQ 100 index down 1.8%. Adobe shares, they're down 4.8%. Adobe is tumbling after the software company reported third quarter results that beat expectations and also delivered an outlook that analysts see as conservative. Day two of chip designer ARM Holdings being traded, and today we're looking at ARM down by 3.8%. Those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
Jess Minton and Simone Foxman here in the Bloomberg Interactive Broker Studio, in for Carol Masser and Tim Stenovec today. But it's been such a big week, especially when you think about the Apple event, which almost seems like ages ago, even though
really
it was
does.
right, doesn't it? So much has happened. But that was just a few days ago, believe it or not. But we do have this story that Simone and I are reading on the terminal. Apple iPhone 15 Pro delivery time slip, slowing high demand. But I don't know about whether or not you're going to get a new.
I am not, actually. I got an iPhone 14, so
I have the 13. I
year.
usually try to ride it out as long as I possibly can before I start upgrading, though I have to say my battery is tricky, but I think I'm just gonna have to keep pushing it as long as I can.
I had an XR for like 3 years.
I had the 6 for so long that my phone company sort of demanded me to eventually change a couple years ago.
You win.
I liked the home button was the reason why I kept that one for so long, and then they got rid of it. But eventually, I had to kind of throw in the towel and get a newer one.
Jess is delaying getting has delayed in the past, no, not right now, getting a new iPhone, and apparently delivery times have been delayed well into November for the iPhone 15 Pro. This, according to some reporting from Mark Gurman on the terminal right now. The new flagship device went on sale for pre-orders on Friday. iPhone 15 models actually became available for pre-order Friday in several countries. The high-end Pro model, though, going to run you $1,199.
$1,200. $1,200. That's see, this is why I'm probably going to keep my.
This is well, and they say I believe they say that people are holding on to their old phones longer because they work well, and I think and one of the reactions
everything works. I can still update the iOS
from the event this week that this isn't a panacea.
I also know a lot of people who are going to start buying the iPhone 14 and some other older versions just because they got cheaper. And so they're kind of jumping in on some of the slightly cheaper prices for some of these models in recent years, too.
What a price point of nearly $1,200, easy to understand. China apparently also seeing shipment delays to November for all iPhone 15 Pro Max models, while the UK is showing 7 to 8 week delays for some versions of the device.
Yeah, that iPhone 15 Pro line, significant upgrade from last year's model, but still pretty pricey. We'll have more coming up, but Bloomberg's Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our radio colleagues, Jess Minton and Simone Foxman, in today for Carol Masser and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms on a Friday afternoon that has effectively erased any modest gains that we had earlier in this week with the NASDAQ and the Russell, as well as the S&P down more than 1%, guys.
Yeah, and especially when you're looking at this triple witching event, adding volatility to this, but then we also have the rebalancing that's happening before the start of trading on Monday. So you do have Blackstone as well as Airbnb set to join the S&P 500 there. So you have a lot of different dynamics moving in the market on this Friday.
But it really does feel like some of the enthusiasm has gone out of the market over the past couple of hours. I mean, we were talking just a few minutes ago, Jess and I, about how remember the Apple event? Remember that was September 12th? That was that felt like ages ago. Yeah.
And let's not forget also the possibility of a looming shutdown. I know that people are so inured to this, thinking that, Washington dysfunction is a normal part of the market, but it does feel like there is a lot of the division politically is a lot more entrenched this time. Romaine is laughing at me. Yeah,
division
I know.
even within certain parties here. I forgot about the shutdown. Thanks for bringing me down.
That could happen. It'll probably get pushed off later on, but it's going to be a focal point.
Yeah, it's going to be a focal point here. We'll see if that has a material impact on the market as markets try to look past that here. Of course, the big event next week is going to be the Fed here. A catalyst actually starting to build back up. Whether that ends up being good or bad remains to be seen. A lot of talk coming into this week about whether the major indices could hold the line, a tight trading range that they've been in, hugging some of those key moving averages. But we're getting a break to the downside here on this Friday afternoon. A Dow Jones Industrial Average down more than almost 300 points here on the day, or about 0.8%. The S&P 500 could not hold that 4,500 level, closing at right around 4,450, down 50 points or 1.2%. The NASDAQ Composite lower by about 1.5%. And your laggard here on the day, or actually I shouldn't say a complete laggard, the Russell 2000 going to close down by 1%, basically even.
Taking a look under the hood for the S&P 500, about 20% of the stocks just that were advancing today. But then if you look over at the decliners, just over 80%, Scarlett.
And if you look at the S&P 500 index by its 24 industry groups, it is a sea of red. Let's start with the best performers here. Telecom services, transportation, healthcare equipment. At one point, utilities were up there as well. What's notable is a lot of these have high dividends. We were just talking with Tom Galvin, who was saying that AT&T and Verizon have dividend yields of in excess of about 7.5%. On the downside, chip companies off by 3.2%, retailers off by 2.6%, and software companies losing about 2.25%.
I'm going to take a look at what's happening with the gainers today. Typically, I have the decliners, so it's nice to be on the other side of things. But when you want to look at some of the few bright spots here, Apellis Pharmaceuticals, that's ticker symbol APLS, it's actually gained about 2.6%, best day since September 1st. So what happened there, Wells Fargo actually upgraded the company to overweight from equal weight. And they did say the worst may be over regarding some of the reports of severe inflammation associated with one of the drug makers' eye drugs there. Another one I'm taking a look at is Moderna. That stock up about 1.6%, so its best day actually just since Thursday, because it has had a bit of a boost this week. But obviously today you're looking at these new COVID-19 vaccines that have been made available. And then I wanted to point out also, when it comes to some of these airline stocks, Southwest in particular, because a lot of these names have been under pressure with some of these outlooks being cut back when you're looking at American Airlines early this week, as well as Spirit. But LUV is a ticker symbol on this one, up about 2.6%, so it's best day since June 27th.
Yeah, I'm going to lean into some of this market angst right now and talk you through some of the decliners. Planet Fitness really catching Wall Street off guard with the departure of its longtime CEO. Shares there falling at a 3-year low. Chris Rondeau is out. He's been CEO since 2013. He's not immediately being replaced. The shares have been down about 24% through yesterday, now down about 36%, so maybe it's just a transition for the company. Also looking at KLA Corporation, this is a semiconductor equipment maker, but I really could give you just about any chip maker or semiconductor equipment maker here. There was a Reuters report out that Taiwan's TSMC telling major suppliers to temporarily delay delivery of high-end chip-making equipment. They're concerned about customer uptake there. The stocks also down about 3% on the day. And finally, Lennar, this is the home builder. Markets processing somewhat disappointing results late yesterday. Yes, it beat on expected orders for new houses, but gross margins seem to be pressured. The company really just trying to keep customers buying homes. You know, JP Morgan says they thought the order growth would be higher, but Vital Knowledge pointing out that people just seem to be looking for any excuse to sell this group with average mortgage rates well over 7%, guys.
Yeah, a lot of great stories this week, and we should just point out as far as the broader market on that volume and the triple witching volume, looks like we're going to come in. It's the third highest volume day of the year. The other two high volume days were also on triple witching Fridays here. Let's take a look at the yield space here. There was a lot of volatility, but actually not a whole lot of movement in seeing where yields are. You're looking at 2 basis points here on your 2-year yield higher, and on a weekly basis, it's only up about 4 basis points. So despite all the volatility, still yields are pretty much where they've been now for the last couple of weeks. We are firmly at that 5% level for the 2-year as we head into that 2-day Fed meeting on Tuesday and Wednesday. You had some activity on the longer end of the curve as well, particularly when it comes to the 30-year yield. It'll be interesting to see whether that flip-flops on Wednesday once we do get that Fed decision, Scarlett, and of course the big press conference that I think is probably going to be much more of an event.
Right, not to mention their economic projections as well. Another reason why yields may be moving higher is that investors could be making more room in their portfolios for the corporate issuance that's coming out early next week. It's not going to look anything like what we saw following Labor Day, but there is still some companies trying to lock in rates before the Federal Reserve meets on Wednesday.
Also, there tends to be a lot of analyst days in the month of September. That was something that Goldman Sachs analysts were pointing out that typically does add to some volatility there. So that's why they were a bit neutral on selling those puts. But also looking at what's happening when it comes to the dollar yields as well as oil prices and that kind of dynamic. We're talking to JJ Kinahan earlier on the radio program, and he's also watching 44.60 as a key level on the S&P 500 to monitor for traders.
Yeah, but if you're looking for something positive here, though, you have to look at some of these consumer expectations of inflation a year from now, notably below where everyone expected them to be, and consumers believing we're going to get about 3.1% inflation 12 months from now. The expectations were for about 3.5%, so perhaps suggesting that the Fed's plan of attack seems to be working, even in the mind of consumers.
Yeah, even in the mind of consumers, how much has that changed, though? I mean, when you talk about oil prices going up and $91 a barrel, a lot has been made about that with WTI and how that feeds through into gas prices. Obviously, we know the Fed backs all that out, but at the end of the day, I mean, this is what people pay attention to when you talk about inflation. At least the average consumer pays attention to is what they're paying at the pump and at the grocery store.
Yeah, this week was a reminder that if inflation is going to reaccelerate, what kind of conditions is that going to create for 2024 when we see the economy slowing down as well? Today's Friday. Are you guys going to go see any movies this weekend? Any Dumb Money? Anyone?
Oh, I definitely want to see that one. It's going to be great.
Got an 85% rating on Rotten Tomatoes.
I'm excited for that.
Is that where Carol and Tim are right now?
I think so. Actually, I think that's what they took Friday off to go together. But there was a stat I wanted to point out. So it's been 99 consecutive trading days since the S&P 500 saw a decline of at least 1.5%. So you have to go back to late April since it's been that long. And that kind of ties into a lot of the hedging and lack of hedging thereof and why hedging has been so cheap in the past 3 months.
I think Dumb Money is going to be the hit of the year.
I want to see
I don't know. I don't know if they can overtake Barbie. I assume Barbie's like the #1 movie of the year.
Oh, yeah, by far, sure.
Yeah, some superlative there, best grossing of X many years. I think.
I know. Dumb Money looks good.
Yeah. Are you going to watch it, Romaine?
No. In the theater? No.
What? Why not?
No. He doesn't stimulate the economy.
I actually did go to the movies last week. I did see what was it, Oppenheimer.
Like 2 months after everyone else.
Yeah, and the theater was packed. It's like, where are all these people?
You're supposed to do Barbenheimer, Romaine, where you go back to back and you see both.
I don't have that kind of stamina here. I mean, in fact, I gotta wait. I don't, and even Dumb Money. Look, just put it on streaming.
Perhaps.
Why are these streaming services exist in the first place?
See, Romaine, I thought you weren't going to see Dumb Money because, as Jim Chanos put it to us on radio, and I know he was speaking to you yesterday as well, he said he lives Dumb Money every day.
He does. But you know what? Is he in the movie? Who plays him? That's the question.
I don't know if he's in the movie.
Yeah.
I know Gabe Plotkin's in the movie. I know Ken Griffin's in the movie. I mean, people playing Ken Griffin. People playing Steve.
Which I think it's funny they made Ken Griffin a little, villainous. At least based on the trailer I saw. So. No comment.
I'll watch it.
All right, guys.
What's he up to these days? He moved to Miami, right?
Yes, he's
right there
he's
on
in
the water.
Florida.
Okay.
He's doing just fine, Romaine.
All right, guys, we unfortunately have to go, but it's been so much fun being with y'all on this Friday. But I hear Carol Masser will be back from vacation on Monday, and Tim Stenovic will be back as well. But obviously, Beyond the Bell, Bloomberg Originals, it's on everything, YouTube, Bloomberg Radio, all the things over here at Bloomberg. But same time, same place. Join us on Monday.
reported story on the U.S. housing market has to do with the federal home loan banks, 11 institutions that sit on top of the $1.4 trillion that are supposed to support affordable housing and community development. But in today's Big Take, Bloomberg Wealth reporter Heather Perlberg and finance reporter Noah Buhayer, Noah, I'm sorry, I probably butchered your name there. They reveal that the system is often being used by big banks and insurers for purposes that have nothing to do with mortgage lending. Heather joins us from Washington, D.C., and Noah's with us from Seattle. Noah, I'm going to go to you first because I apologize if I butchered your name there.
You did a great job. No, it was just fine.
Oh, fantastic. Thank you. But explain to me how the system is supposed to help low-income borrowers, because I don't know much about it.
Yeah, so in a nutshell, the home loan banks are lenders to lenders. What they do is they go out and borrow a lot of money in the bond market, and their members are other financial institutions, mostly banks and insurance companies, credit unions. And they make loans to those financial institutions in return for collateral, which is, so in the most basic form, if you're a bank, you'd go out, you'd make a home loan, and then you'd use that home loan as collateral to go get what's called an advance from the federal home loan banks. And it's a way for you to recycle your capital and keep making loans. The system gets pretty complex pretty fast, but the main thing to know is that basic model of a bank going out and making a home loan and then recycling its capital by getting an advance from the federal home loan banks, it doesn't quite work that way. And it got really interesting earlier this year because we saw a lot of regional lenders that got into trouble were tapping the home loan banks to deal with a run on deposits or and to meet their immediate cash needs, even though many of those institutions weren't really in the business of making mortgages.
Well, Heather, I want to bring you in here, Heather Perlberg, our senior wealth reporter. Heather, so this is how the system is supposed to work. But, you know, from your story, it doesn't sound like the people who are at the lowest tiers of income are really able to always access this money, even though they're supposed to be able to, right?
Right. So when we took a deep look at what was happening and looking at the disparity between these members, the community lenders and the really small institutions that are on the ground helping these people, in large part, rural and urban America who are lower or middle income, build credit, buy their first house, and really build wealth, those are these community lenders. And they're doing a far better job of, you know, making new homeowners in this country than any of the big banks. And their access to the federal home loan banks is really limited, which is problematic because the federal home loan banks were really created in part to help boost home ownership for people who needed it the most.
Yeah, so why is their access to these funding so limited?
Well, there are a few different issues. One of them is that they're seen as riskier borrowers. Big banks just have a lot of assets and are seen as more sort of financially sound institutions. But part of what you need to do is drill in deep, which is what we did. And when you see the kind of work that these smaller community lenders are doing, they're making good loans to people. Their loans aren't going bad. They're working with them to improve their credit scores and really be able to afford these homes. But banks often just don't have the time or energy for that kind of work. And because they're smaller, because they don't have the kind of collateral that's seen as acceptable by the federal home loan banks, they really get penalized.
You know, I thought that the community banks did actually okay during the whole regional banking issues that we saw earlier this year, right?
Yeah, certainly. I mean, the problems and the failures we saw were at institutions that had made forays into very particular segments of the economy. They were serving as bankers to the crypto industry, or they were deeply invested in They're often they have a very targeted market in the sense that they may be working in a rural area where other financial institutions really aren't serving, or they have a particular community that they're working with a lot to help provide the services that the community is really asking for.
So Noah, what do you think could be really the main catalyst to change those types of dynamics that need to happen?
Well, I think what we heard from a lot of these community lenders that we spoke with is that the rules around what they can borrow from the home loan banks could be changed. They, for instance, have wanted for years to be able to pledge different kinds of collateral. Say you're doing non-predatory auto lending, a good auto loan to help someone buy a car so they can get to work. Maybe that should be the kind of thing that an institution should be able to pledge to get money and basically free up more funds so they can do more lending in their community. The reason all this is relevant now is not just the regional banking crisis. We're days away from the Biden administration releasing a report on their view for how the home loan bank system could be reformed. And Heather and I are definitely going to take a look at what's in there, and this is an area where we could see some changes not too far off.
One of the things that really struck me as well was that some of the people you spoke to had tried, over and over to get a loan from a regional bank that is also accepting this funding, and they really couldn't do so. Heather, what are the dynamics that keeps them from getting that capital there?
There are a lot of people in parts of the country that are underbanked, and they don't have credit profiles. They don't really have a history. Many of them don't even have bank accounts. So if you don't have a chance to build a financial profile, then there's no sort of history to look at the spending you've done and say whether or not you're a good borrower. Credit scores continue to be a really important aspect of qualifying people for loans. So when, you have very little there, one medical bill could derail your entire score. So what these community lenders do is they just take a more active approach. They really work with these borrowers and they say, this is the credit card you need to close down. Pay off this one. Pay off this one bill. And people listen and do it, and their credit scores go up. Within the course of a year, one of the people we spoke with saw her score go up more than 100 points, and then she qualified for a loan. But if you're a regional bank and you're just turning people away, they're just kind of left fumbling around and wondering what to do to bring up their score. It's not going to be that easy.
It's so interesting because, you see a government, especially after some of that regional banking crisis, really pushing to consolidate some lenders in the industry. And yet, as you guys are talking about, the community banks are the ones that really can spend a lot of time with those clients and get them to a place where they can borrow successfully. That's Bloomberg Wealth reporter Heather Perlberg and finance reporter Noah Buhayer. Thank you so much for joining us. Our listeners can take a look at that story on Bloomberg.com. It is today's big take, and it's on the terminal as well.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. A weekly loss, 2 in a row now for the S&P 500 index, down by 0.2% on the week. Stocks fell today as traders weighed the impacts of a strike that hit Detroit automakers while sifting through economic data ahead of next week's Fed decision. Big tech led today's losses. Giants like Nvidia and Meta Platforms were down over 3.5%. S&P 500 index ended the day with a loss of 54 points, down 1.2%. S&P ending the week at 4450. The Dow down today by 288 points. That was a drop of 0.8%. NASDAQ, the composite index, was down 217, a drop of 1.6%. 10-year yield 4.32%. The 2-year 5.03%. Gold up $12 the ounce to $19.22, a gain of 0.6%. West Texas Intermediate crude oil up 1.1%, $91.12 a barrel. Again, recapping, stocks lower with the S&P down 54, a drop of 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie. We appreciate it. Simone, I don't know about you, but whenever you are in a particular checkout online, depending on whichever retailer you're using, do you ever abandon your cart? Do you keep things in there?
I don't abandon it, okay? I have to say, my Amazon cart is like enormous.
Mine is too.
Other retail, at least it stays. Some other retailers, I put stuff in the cart, I don't click out, and then I'm like, wait, I spent all this time looking for something.
Right, and so I do something similar, especially when I'm on Amazon too. There's things that I'm sort of eyeballing, but hey, maybe if it drops in price, if it's Prime Day or going to the holidays, I'll keep it. But there's a company that's trying to remove that friction when it comes to retail and when it comes to that checking out dynamic there. And who better to chat with us about this than Maju Kuravila, CEO of Bolt. And it's a payments platform and company, and he's going to talk to us about how AI can help the challenges that are facing the e-commerce world. He's actually joining us on Zoom from Seattle. It's great to have you back and speaking with us again. For those who haven't heard you yet on our program here, talk to us about what Bolt is and what it does.
Great to be back here. The problem you just mentioned, which is people come to an e-commerce site, browse around and end up not buying something. And that is such a huge problem. Like around 98% of shoppers coming to a site does not end up buying something. So Bolt is simplifying that process and make it efficient. So more people coming to the site end up buying.
How many retailers at this point use Bolt?
Well, we have hundreds of retailers using Bolt. And if you look at the last year, we historically has been very focused on small and medium businesses, and we introduced our enterprise product last year. So now we have very large enterprise retailers using our product. For example, Revolve. They started using Bolt last year. I worked closely with their leaders. They introduced Bolt, and they saw a 4% increase on revenue just after turning off Bolt.
So we know that AI is all the hype right now in so many different industries that it touches. What is it particularly about AI that you think can be used to solve the friction between the issues when it comes to shoppers that might be abandoning some of their carts and the retailers on the other side that are trying to build some of that brand loyalty?
Yeah, AI, as you can hear from the industry, there's a lot of progress happening from a technology perspective. And e-commerce especially, is a great place to get a ton of value from the AI side. First and foremost, you think about if you can recognize a shopper the minute they come to your website. And if you can recognize them, can you provide a very personalized experience for that shopper and make great recommendations? And once you decide to buy something, can we make that buying process very easy and simple, avoid any kind of fraudulent charges, and make that whole process complete? So from a Bolt perspective, what we are looking at is the root of making all those things possible is knowing the person. Like, can we identify the shopper so you can provide all this great experience? So what we are focused at Bolt is creating this large shopper network that we can track the shoppers across different brands, especially the large brands, and help the brands to identify them so they can provide this great personalized experience using the power of AI and maintain a lifelong relationship with them.
Well, I understand you just recently hired a new president, new CTO, and you have some new big tech initiatives for e-commerce, for checkout, kind of in the lineup. Can you talk to me about what you're trying to do that you weren't doing before?
Yeah, so as we moved into the large enterprise retailers, what we realized is, helping people at the checkout is great, but recognizing the shopper throughout their shopping journey is so important. So we are looking at the identity for e-commerce across the board and using that identity to power the new capabilities like AI. So as we were looking at the new roadmap and technology, it was important to bring in like people who have done this before and have a ton of experience. So couldn't find anyone better than Cal Raman, who drove a lot of early growth at Amazon and Walmart when they were trying to get into the e-commerce. And he is going to help us drive our vision forward on building one of the largest shopper network for e-commerce, and then building that identity platform, which will power all the AI capabilities for the commerce world.
Whenever you're tracking this, are you able to pull shopping behavior in a sense to see how Americans are spending?
I mean, because we are able to see the actual shopping as well as their buying behavior, we are able to see a lot of data that allow us to see some of the trends.
So what I'm curious about, though, the reason I ask, I want to know, what do you think that tells us about the economy? Because so many people talking about the consumer and what it means and looking forward, and they're thinking there's going to be a pullback. Are you actually seeing any of that?
Well, even with all the views on how things can go down, what we are seeing is there is a continuous improvement on the e-commerce side. Like there is more sales, but the price is increasing. Now the question is the more sale coming from the increase in price, or is it more people are buying? And when we look through the details, what we find is it's more sector-based or category-based. In certain categories, people are shopping more, while some categories they are seeing less than what they saw during the pandemic peak. But one thing is very clear is consumers are still focused on deals and discounts. So there is a real high focus on that. And so the retailers who are able to understand that consumer behavior and provide them very targeted response or deals are seeing obviously a much higher volume than others.
Can I ask you a little bit about just what it's like being a tech startup at a tech startup right now? What are you seeing in terms of it's been a difficult year or two probably. What are you seeing now? Just give me a lay of the land as someone who's had to deal with a tight labor market, but also potentially had to lay people off in the past.
I mean, it's a little bit about back to the basics on how do you define and find sustainable growth, and how can you have unit economics when you drive that growth. So really focusing on where that growth coming from. For example, for Bolt, we found that our growth is coming from our new enterprise product, helping our brands, and we found immediate market success on that product, and hence I mentioned about the Revolve case study, clearly demonstrating our products are working. So we had to prioritize. We had to shift our priorities to things that are really working and clicking in the market, and then deprioritize the things that didn't really yield the results what we thought. And then it comes to like having the right people and the right talent around you to drive that vision forward. And it all comes at the bottom line is, I spend an enormous amount of time to work closely with the customers and really understanding what matters to them, what are some of the top problems they have, and then aligning our product roadmap so we can work closely with them and deliver results for them. That is what they are looking at.
So we only have about a minute left, but what's your view on sort of the future of AI and how it impacts this business?
I mean, there are, two top things that a lot of retailers, top of mind for retailers. One is returns, and one is like omni-channel, like a lot of people are buying online and picking up at store. And so when I think of AI, there are very tactical applications on, like, if you know the consumer, if you know their behavior, how can you help reduce some of the return problems? Or how can you target your customers better at a very deeper level, so you can understand how much they are buying online, how much they want to pick from store, and then providing them very targeted experience from that. But a common component, if you look at both of this, is knowing the consumer. So to do any kind of personalization, you got to know the person. And so at Bolt, we really focused on knowing that person, building a consumer network, and then empowering the data to bring some of that AI capability for retailers.
All right, Maju Kuravila, CEO of payments company Bolt, joining us to talk about how AI can help the challenges facing the e-commerce world. Always a pleasure speaking with you, and thank you so much for being back with us. But really interesting conversation, Simone, especially when you think about what we were talking about when it comes to us leaving some of our favorite items there in our shopping carts. We'll have more coming up with Simone and myself, but first, let's get a check on the latest world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. A targeted strike against each of the big three automakers is now underway after the United Auto Workers Union failed to reach a contract deal with the companies by midnight. President Biden says he knows the companies have made substantial offers, but he says they can do more.
Record corporate profits, which they have, should be shared by record contracts for the UAW. And just as we're building an economy of the future, we need labor agreements for the future.
The UAW is striking at a Ford plant in Michigan, a GM factory in Missouri, and a Stellantis plant in Ohio. Donald Trump is denying accusations that he asked a Mar-a-Lago staffer to delete security footage sought by federal investigators in his classified documents case. In an interview with NBC's Meet the Press, Trump called the charge false.
When they asked for the tapes, I said, sure, they're my tapes. I could afford them. I didn't even have to give them. Just so you understand, though, we didn't delete anything. Nothing was deleted.
According to a July indictment, though, the Mar-a-Lago maintenance supervisor allegedly asked the property IT director to delete security footage, saying the instructions came from, quote, the boss. Jets quarterback Aaron Rodgers is recovering from surgery to repair a torn Achilles tendon that he suffered in this week's Monday Night Football game. The 39-year-old spoke on the Pat McAfee show about his recovery.
There's a lot of different ideas about the overall length of the rehab. I think what I'd like to say is just because somebody hasn't ever done it a certain way doesn't mean it's not possible.
Rodgers responded to those who say he should retire by saying, watch what I do. Tune in to Bloomberg Radio tonight at 5 Wall Street time when former Vice President and current GOP hopeful Mike Pence speaks with Balance of Power. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. Another weekly loss for the S&P 500 index. 2 in a row, down 0.2% today. Stocks fell as traders weighed the impacts of a strike that hit Detroit automakers while sifting through economic data ahead of the Federal Reserve decision. J.J. Kinahan is the CEO at IG North America, right here on Bloomberg Business Week. He told us he is concerned about the potential of a widening strike.
I actually think if this lasts for any period of time, the effect may be bigger, and that's truly what I overall worry about, is that the entire transportation sector gets affected, which drives up cost of goods.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Download it wherever you get your podcasts. Auto stocks were mixed today. GM had a gain of 0.9%. Ford shares lower today by 0.1%. And Stellantis was up 2.1%. Down day, though, with the S&P 500 index falling 54 points, down 1.2%. The Dow today down 288 points, down 0.8%. NASDAQ down 217, a decline of 1.6%. 10-year yield 4.33%. We've got the 2-year yielding 5.03%. Spot gold up $13 the ounce to $19.23, up by about 0.7%. And West Texas Intermediate crude oil rallied 1.1%. WTI ending the week above $91 a barrel at $91.16. Again, recapping, stocks lower, S&P down 54, a drop there of 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thanks so much. Well, the COVID-19 pandemic may be over, but unfortunately the virus hasn't vanished. Earlier this week, the CDC signed off on new vaccines from Moderna and Pfizer-BioNTech for people ages 6 months and older. Major pharmacies, including CVS and Walgreens, are already offering appointments for it. Jess, have you haven't gotten a vaccine in a while, have you?
It's been a little bit, but I definitely have gotten probably at least 4 or 5 when you conclude all of the boosters. But I feel like it's time for another booster soon, as well as a flu shot.
Well, that is the question. And we have Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, joining us to explain. So doctor, the CDC recommended, and I'm quoting here, everyone 6 months and older get an updated COVID-19 vaccine. For the sake of hypotheticals, say you're young, healthy, and maybe 30-something and, got some shots, all the shots that you needed 2-3 years back. Does this mean you have to get another vaccine now?
Great question. All of this is coming up because we are seeing a sort of a mini surge, an increase in the prevalence, really over the last 6 months of COVID. Slight increase in hospitalizations, but the good news is slightly decreased deaths from COVID. So to your question, the majority of people in the United States, either because they've had COVID, whether they knew it or not, and or because they got vaccinated, have antibodies and probably T cells, which really explains why we're seeing perhaps really a decreased death rate. So although the CDC did advise or did suggest that over 6 months of age would be appropriate, many other countries really are saying they should be targeted to specific groups like over 65. And, as also you're alluding, because we do see some side effects, some adverse effects that are not tiny, perhaps the question is, should we target the populations? And I think everyone agrees, older, above 65, lung disease, pregnant women, people who have immunocompromised states, definitely. Young, healthy women such as Simone and Jess, or we think healthy, and certainly young men, where we do see an increased incidence of myocarditis and some other side effects. They may not really need this as a priority. Certainly, again, just for that older age group, certainly over 60, the RSV vaccine, respiratory syncytial virus, very common cause of hospitalization and morbidity. The new vaccine recommended. Flu shot, the efficacy varies year to year. Some years they hit it right. Some years it doesn't work so well, but certainly that seems to be safe and reasonably effective, a low incidence of side effects. But to answer your question directly, if you've had COVID or if you've had a vaccine, the benefit of this new XBB variant, which was kind of the formula that was developed, is really sort of an older variant. We've had a lot more variants since then, and how well the new vaccine will protect against BA 2.86 and EG5 and so forth, a little unclear. If you're older, definitely you should take it. If you're young and healthy, I would read about it, think about it, maybe talk to your doctor.
What about when it comes to the flu shot? Should you get both of these at the same time? Do you space it out? How does it work?
Right. So all of these things are targeted to when we think there's going to be a surge. Typically colder weather, people are indoors, no fresh air. So ideally, if you can get lots of fresh air, exercise, some sunshine, plenty of rest, your immune system is better. So the timing really is sort of end of September, now to end of September, beginning of October would be very reasonable to get these shots. I would say flu shot, now for the next month or so would be helpful. RSV so far we think is maybe not yearly, but like a one-time shot, maybe next year a booster. I would wait a couple of weeks in between. We definitely see more side effects if people take 2 or 3 shots at the same time, much higher risk of problems. There's no need to do that. It is a little bit more of a time inconvenience to come back every couple of weeks. But if it were me, I would not take them all at once. I would do them sequentially.
Right, and so is getting sick. That's a time inconvenience, I think, certainly, as well as a health inconvenience. Look, the health emergency that was in place for a very long time expired in May, as I understand it. Is it going to be challenging to make sure a large part of the population gets the vaccine, under these new post-pandemic circumstances?
I'm seeing in my patients, which is obviously anecdotal, I think there is a bit of vaccine hesitancy. I think people who've had the vaccine realize they've gotten COVID, maybe milder and probably less hospitalization, so there's some benefit. And I think young people like yourselves, raise the question, do I really need it? There's definitely some vaccine hesitancy, but patients who have underlying lung disease, diabetes, overweight, or elderly, or if they're traveling, many people are traveling to Europe, trapped on a plane with 300 people, there probably is some benefit to a couple of weeks before you travel to do that. You do get a bump in antibodies, which is good. Those do wane over a few months. So, maybe by January or December, those antibodies may be lower. So there's definitely some protection. I don't think we can say yet how much, but I think if you've had COVID or had prior vaccines, your risk of dying from COVID, again, if you're otherwise healthy, is pretty low.
We have about a minute left. I'm curious because I've had a number, just kind of anecdotally, where people have been traveling overseas that have obviously been starting to get COVID more often. What's your sort of take as we head closer to the holidays in the traveling season for the holidays as well, as far as what variants are out there at this point?
Well, there are many variants. Some of these have like 30 amino acid changes. There are probably 15 or 20 different COVID variants. And that's the problem with the vaccine that's a monovalent. Like it can probably help, but it's certainly not going to target these. I talk to people about Paxlovid, which is a pill. Again, you have to talk to your doctor. It depends what medications you're on. Some have to be stopped, like statins. But Paxlovid is great. If you get COVID, if it's more than a mild case, it's great. There are some doctors, not officially, who give patients who travel Paxlovid so that if they do get sick, they may have it if they're traveling abroad and otherwise can't get it if they test and turn positive.
We only have about 20 seconds left, but what's the top question that you hear from people who are still, hesitant at this point?
I think they ask good questions. Doctor, do I need this vaccine? Is it going to make a difference? I've had COVID, I've been vaccinated, and I say it's a difficult decision. There are some adverse effects, not a lot, but definitely some. If you're in a risk group, I advise take and talk to your doctor.
All right, Dr. Ian Lustbader, clinical professor at medicine at NYU Langone, joining us. We'll have more coming up. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. The United Auto Workers Union began a strike this morning against all three of the legacy Detroit car makers, an unprecedented move that could launch a costly and protracted showdown over wages and job security. Workers are off the job at a Ford plant in Michigan, a GM plant in Missouri, and a Stellantis plant in Ohio. Keith Naughton follows the auto industry for Bloomberg News. He says automakers and the union are far apart.
You know, there is such a wide, divide between the ask and the offer from the companies. So it's clearly something north of 20%, but the companies say they can only afford so much. They're spending collectively more than $100 billion on their new EV programs. So they say they can't spend 36% or it will bankrupt them.
Bloomberg's Keith Naughton. Interestingly, some of the automakers moved higher today. General Motors up by 0.9%. Stellantis, the parent of Chrysler and Fiat among many brands, Stellantis up today by 2.2%. Ford shares, though, down by 0.1%. Apple's new iPhone 15 Pro quickly saw initial delivery times slip well into November as the new flagship device went on sale for pre-orders, suggesting strong demand for the most expensive model. Adobe shares after earnings declined today by 4.2%. And those are some of the top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
Jess Mitten and Simone Foxman here in the Bloomberg Interactive Broker Studio, in for Carol Masser and Tim Stenivek. Before we have more coming up, let's get a check on the latest world and national news from Nancy Lyons in Washington, D.C.
Thanks, Jess. Ukrainian President Volodymyr Zelensky will meet with President Biden at the White House next Thursday to express his need for additional aid. This will be Zelensky's third White House visit. He's coming to Washington after attending a United Nations meeting in New York. National Security Advisor Jake Sullivan says Zelensky will provide an update on his country's offensive and the need for more support.
I think he's looking forward to the opportunity not just to see President Biden here at the White House, but also to see congressional leaders from both parties to make the case that the United States has been a great friend and partner to Ukraine throughout this entire brutal war, and that the United States should continue to do that.
Sullivan says the visit is crucial as Congress considers President Biden's proposal to approve an additional $20 billion in aid to Ukraine. Elon Musk's decision not to extend Starlink satellite service to help a Ukrainian attack is now getting a Senate review.
The Senate Armed Services Committee is looking into the national security implications of that decision from Starlink's parent company, SpaceX. In a statement, Democratic Chairman Jack Reed says neither Elon Musk nor any private citizen can have the last word on U.S. national security. Along with operating Starlink, SpaceX is a major U.S. contractor. It launches spy satellites for the Defense Department. This week, Musk told a podcast he would have extended Starlink for the Ukrainians if President Biden had directed him to, but no directive of that sort came. In Washington, I'm Nathan Hager, Bloomberg Radio.
One American and two Russian space crew members have docked at the International Space Station. They lifted off earlier today from Kazakhstan. They were supposed to fly to the space station last spring, but their original capsule was needed as a replacement for another crew. Well, stay tuned to Bloomberg Radio because in just a few minutes, former Vice President and current GOP hopeful Mike Pence will be speaking with Balance of Power co-hosts Joe Matthew and Anne-Marie Hordern. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Jess and Simone.
Thanks, Nancy. Well, as we close out the week, we think about the return to office because a lot of companies have been pushing all their employees to really return to office with the back-to-school season. And one of the great stories we have on RTO, I guess it examines a different angle, right, Jess?
Looking at this return to office, when it comes to CEO relationships, which apparently, Simone, are back at the forefront here. So workplace romance still apparently thrived during the lockdown, but it was harder apparently to see. So it's interesting in this particular story on the terminal, the resignation of BP's chief executive officer, Bernard Looney, marks the latest in a small but obviously high-profile list of corporate leaders who have run afoul a company policy related to relationships with subordinates. So as more workers are in the office again, such relationships are apparently likely to become more visible, Simone.
Well, the statistic in the story that really struck me was that 33% of U.S. employees said they're currently involved or have been romantically involved with a coworker. And that's up from 27% pre-pandemic. This according to the Society for Human Resources
So about
Management.
a third, it looks like, of U.S. employees saying that.
I mean, it's sort of stunning to me that despite all of this momentum pushing towards, I guess, a little bit people not to do this in the workplace. Apparently, this has continued. Maybe it's human nature.
I'm also
or maybe
curious
it's back in the office.
after that happens, how many have broken up in that situation? If you are all under the same sort of roof when it comes to the employer there.
Yeah, doesn't it make it awkward? I don't know.
I would think so. Yeah.
I'm saying for someone who's been married for quite a few years here. Well, Jess and I are thankfully back in the office. Though Tim and Carol will be back next